welcome to the BloombergQuint conversation on surfing the decentralized finance wave, which is powered by HeroWire. My name is Ivor Sones, and I'll be your host for today. That fintech is big in a country of 1.3 billion people is no secret. India has the highest fintech adoption rate globally, and India's fintech market is currently valued at over $31 billion and is expected to grow to $84 billion by 2025. Now, from a platform perspective, UPI has really provided a very interesting and a very powerful start to fintech. But the party is really getting started. With millennials, and not just millennials, but even people in B and C class cities increasingly taking to crypto, it is fast becoming a tool for India's fintech growth, which is parallel really to the UPI-led digital payments push. And with all of this, really, all of this is contributing to the decentralized finance wave. And blockchain is really coming of age in this environment, with the technology transition from mainframes to cloud to blockchain. While digital payments and e-commerce have exploded, crypto and DeFi have a very powerful appeal because of the investment potential and because it will also be key to buying on the metaverse. And blockchain will be instrumental in not just supporting, but drastically improving our existing financial infrastructure and perhaps taking India to a whole new level in the arena of decentralized finance. And the crypto ecosystem is really maturing and also moving here from decentralized exchanges to decentralized exchanges and, of course, related verticals like NFTs. This clearly means that while many see fintech as a powerful booster for the Indian economy, decentralized finance as a part of fintech may be an even bigger enabler of growth. Today, in this BloombergQuint conversation on surfing the decentralized finance wave, which is powered by HeroWire, and part of our series Reimagining the Techverse, we will explore the various aspects of DeFi, current trends, use cases, regulatory issues, the talent crunch that we see over here, what job seekers need to do, and what perhaps the country needs to do to really get decentralized finance right in order to benefit not just India, but Bharat as a whole. And to help us do that today, we have some really eminent guests from this space. First up, we have Tanvi Ratna, who's the founder and CEO at Policy 4.0. Tanvi is a respected policy advisor. She's who specializes in digital currency and emerging technology. She has worked for the Indian Prime Minister's Office, the US Foreign Affairs Committee, etc., as well as several ministries and state governments. Next up, we have Sami Start, who is the co-founder and CEO at Transact. And Transact has recently rolled out the UPI integration for fiat to cryptocurrency for dApps in India. Thank you so much for being here, Sami. Next, we have Darshan Bhatija, who's co-founder and CEO at Vault, a crypto trading exchange. He comes from a long line of financiers, and his ambition is to make loans from the crypto world accessible to anyone who needs them anywhere on the planet. And last but definitely not the least, we have somebody who comes in from a tremendous finance background. We have Shivakumar Bavamala, who is lead faculty finance and fintech at HeroWire. Shiva brings over 16 years of experience in the financial services sector, working in trading and risk management roles in India and the United Kingdom. And since 2018, he's also been investing, building, and mentoring businesses that produce protein and vegan alternatives. Thank you so much for being here, all of you. I look forward to a fascinating discussion and learning a lot about decentralized finance. First up, I wanted to start out with trying to understand the lay of the land, as it were, here today. So I wanted to ask, how are really investors seeing crypto today? Has it become an accepted asset class? We hear a lot of reports of investors in B and C class cities in India also now investing in crypto, etc., and which is certainly the vanguard of decentralized finance. And how are investors seeing it? Do they see it as an inflation hedge, a safe haven? And is there an evolved investor thesis for crypto? And Tanvi, I'd like to ask this to you as we start, since you've been an observer of this industry and the trends that happen over here.
Yeah, thanks, Ivor. It's great to be on this session. And I think that's a very good starting point, right? Understanding how the attitudes towards crypto have evolved from institutions, and that includes, investors, that includes regulators. So I think if you see the growth of Bitcoin, like we had the first major boom around 2017-18, and that was the time of the ICO boom. And I think at that time there was very much a view of crypto assets as being something that's a Ponzi or a scam, and not really taken very seriously. And at that point there was a very strict sort of shutdown of that, especially by the SEC, where they had uh, done a whole range of subpoenas on projects. And that phase kind of went away. Then we entered a period of the crypto winter where there was a lot of speculation of, is this really something that's going to sustain? Is it not? I mean, was it just a flash in the pan sort of movement? But I think it's always had its believers. And I think, for me, Darshan is a prime example of, one of those entrepreneurs who really worked through that crypto winter, and, he's built something very incredible as a product. And so there were a lot of people building at that time while the investor sentiment was really not very positive. And I think you see then 2020 onwards, a lot of things change. If you see from the Indian perspective, the Supreme Court verdict had come out. And I think that verdict where, the RBI circular was sort of struck down, and the prohibition that was there on crypto since 2018 was temporarily, lifted. And I think that created a very sort of positive sentiment. And then you saw very high retail growth out of India, right? So I think that year there was maybe, there are no credible estimates, but I think maybe 40, 60x growth in that industry in just that year alone. And I think as far as Indian investors go, I think on the retail side, you definitely see, now right down to the small towns, there's a lot of, people who are bought into it. There are a lot of people who they've already made a lot of gains out of this, and they view it fairly positively. I think on the institutional investor side, there's still a lot of caution. I think when you look at the banks and the funds, I think they're still sort of treading the waters here. But globally, you have seen that attitude shift a lot, right, in the last year and a half. And I think that because global macroeconomics have, been, the low interest rates and the kind of environment where there's been a lot of search for yield and assets that give you yield. And I think a lot of corporate treasuries have then looked at crypto assets. And I think in India that's not been exactly the case yet, because the macroeconomic landscape is a little different here. But let's see. I think this year or the next 12 months should be quite significant for India.
So, Shiva, if I could, throw that same question to you now. You, of course, come from a traditional finance space. You understand fintech. You understand finance very deeply. How do you see this as an observer? How do you see investors really seeing crypto today? And from your context, do you have a different perspective?
I think Tanvi has already sufficiently covered the interest amongst institutional investors globally. As she rightly pointed out, there is a fair bit of interest amongst various kinds of institutional investors. And as she also rightly pointed out, the broad basing of retail interest in many markets, including India, is also encouraging. Now, do crypto assets have they found a place in the portfolio of the global investor? I think it's fair to say that has already happened. And that's primarily down to the fact that you now have at least a handful of cryptocurrencies which have the kind of liquidity and market depth to be able to support that. So that's one of the parameters that one of the boxes that you need to tick in terms of making an asset investable to have sufficient market liquidity. There are two other points that you touched upon. Is crypto a good inflation hedge? I would say the jury is still out. It's a fairly recent asset. The investment thesis is still evolving. Unlike equities, for example, which has been around for decades and has seen a lot of people think about the investment thesis. With cryptos, it's still fairly recent. So the jury is still out on whether it's a credible inflation hedge. But I think what 2020 does is that it's probably not a safe haven. It's certainly an asset to go after if you're looking for yield and diversification. But if you see what happened in 2020, the weakness in cryptos when COVID hit us, it pretty much tracked the weakness in equities, which is very unlike the behavior that you would expect of a safe haven asset. So to that extent, I think at the moment the thinking very much is that it's an asset that you want to really consider because it provides you diversification and it provides you the kicker in terms of yield because of the rally that we have seen, broad-based rally that we have seen in cryptos.
I'd like to just step in and maybe have a different opinion when it comes to the asset class being uncorrelated and possibly a hedge. We did see markets correlated and in turn dropping during the COVID scare, if I may. But when it took the equities market about 60 days to rebound, it took the crypto space about 5 days to rebound. And it's really important to know that the crypto asset class, the price is fundamentally determined basis buy and sell pressure. And there are multiple personas of folks who invest in the crypto space. There is the growth investor, where they look at this as this asset class as a large upside, relatively short amount of time, and that caused very temporary movement in price, very heavily correlated to the equities market. But what you'd also see is it was probably one of the largest accumulation days the crypto space has ever seen, where existing large wallets, commonly known in the crypto space as whales, doubled down and accumulated that and brought the price back up in 6 days. So while gold trended upwards immediately, crypto, even through COVID, outperformed gold, even if you look at the 30-day timeline immediately after COVID. So while you can look at the shock as a negative, it's because of the fact that it's such a ubiquitous asset that it attracts more than just people looking at it as a hedge.
One more thing I just want to add. I see a slightly different viewpoint on this, which is that cryptocurrency is actually starting to be something that people use. So many people are talking about it as a price asset. Is the price correlated with this thing and that thing? And that's great. But people are forgetting that the reason why cryptocurrency exists is you're supposed to actually use the blockchain, right? You're supposed to have blockchain applications and you're supposed to actually use them. And since we've had so much great VC investment in the space, we have so many really good teams working on building products. That adds value to the cryptocurrencies kind of inherently, right? The same way, like if a lot of people want to use oil, then the price of oil is going to go up. If a lot of people want to use Ethereum applications, then the price of Ethereum should, in theory, go up. And so that's something that gives me personally a lot of confidence in the space. Even when I see the price going like this, I just see all the great work that's happening in the space, and I know that it's worth something. So just a slightly different way of looking at it.
Yeah, that's a very interesting way of looking at it, Sami. One of the issues, though, and one of the larger geopolitical issues right now going on is it's what's going on in Ukraine, and more importantly, the response of the West, and really, in terms of sanctions and in terms of the West really controlling financial infrastructure like SWIFT. And I know that countries like India are very wary of this. So Darshan, from your perspective, I wanted to ask you, what are some of the gaps in traditional BFSI that you think DeFi decentralized finance can bridge? And especially in contexts like this, right, wherein currently the power structures are in the hands of a few powerful nations, and countries like India may be very wary of things like that. And how do we perhaps use decentralized finance to bridge some of these gaps?
With regards to everything that's happening with Russia and Ukraine, want to unequivocally come out and say that crypto as an instrument is not in the traditional sense used to bypass sanctions, because every crypto participant has to comply with the same. So I've seen that argument slosh around, and it's just inaccurate. It is, however, a distributed and decentralized system, and because of that, there is no counterparty dependence. You're essentially, as every individual participant, talking to a distributed computer, And what that means is, while there are barriers from a technical perspective to use this, the upside is you're really disconnected from A, being swayed by one or two superpowers, and B, being swayed by even local bad practices that comes with interest rate manipulation and currency manipulation and the like. So it's just a fantastic instrument in case you want to build wealth over the medium to long term, because you're the true custodian of your funds, and it's for the first time possible in the digital world. Of course, you could hold on to bricks of gold, but we all know how dangerous that can be. It's incredible, both from an individual's perspective as well as governments who are challengers looking to de-risk from everything that the West controls.
Tanvi, you were talking about how India is trying to deal with some of these challenges. So can you tell us a little bit more about that, and in terms of how DeFi could come in over here? And maybe Shiva, even you might have a perspective on this too, because you understand this very well.
For India, I mean, our financial markets have not been traditionally very big, or, we are also not as deep in this currency game, as China or Russia have been. We've also not been looking so much at de-dollarization, the way that China or Russia or other countries have been doing, right? So we are in this fairly comfortable zone as far as being with the West, right? And I think at the moment, like, that's something that I see for the first time there are questions about, right? Because, we've notoriously stayed neutral in this conflict. And then that creates a lot of pressures from all sides, right, on our government. And I think, we've obviously done a fairly good job in terms of self-sufficiency, as a country, in terms of internal systems, right? So, I mean, if Visa and MasterCard shut down in India tomorrow, it won't really matter, right? We still have UPI, we still have RuPay, and our payment systems work pretty well even during COVID and things like that, right? So, but I think now, if you think about DeFi, if you think about, cross-border, and I think there are definite angles where, the crypto assets could come in, but I think the government still views more of like CBDC plays and stuff in situations like that. But I think it's definitely now there's space for these kind of deliberations. We're driving a lot of those deliberations on a, national security or geopolitical sort of perspective. So that's all I can say right now. But I think over time you'll be seeing more of that.
I think the whole Russian or Ukraine conflict is a very temporary and topical sort of framework within which to view this whole thing. I think there's the larger picture of how India can leverage DeFi in eliminating certain inefficiencies that have crept into the financial system over the years, over the decades. International payments is something that Tanvi touched upon, and that clearly is a space that not just India but many countries need to tackle international payments through the banking channels. By various estimates, I think the SWIFT network ends up processing an extra $600-700 billion of transactions just because of inbuilt inefficiencies. And we also know about the costs at the time that it takes to make an international transfer through the banking channels. So that's one pretty obvious space that DeFi could help make more efficient. Also, if you look at our domestic financing scene, if you just look at the cost of access to credit and the cost of credit, and the difference between where one can take a personal loan versus where one can place a deposit, the difference between that is a measure of how efficient or inefficient your whole banking system and the credit management system is. And by various measures in India, it's quite a yawning gap. Today, if I wanted to take a personal loan, I'd probably pay a double-digit rate of interest. whereas an FD with a bank is probably going to barely get me 5%. So some of these inefficiencies is also a space where I believe in the long term, medium to long term, DeFi could certainly help make more efficient. In other words, better credit lending decisions, meaning better use of capital.
That's really interesting. And Sami, from that, I really wanted to go on to really some of the larger use cases of crypto, and especially that you are seeing now. Of course, you are a global player. You all have just entered India. So, what are some of the interesting use cases that you are seeing? Crypto, DeFi, etc., from games to the metaverse to UPI in India. And how are you seeing financial institutions, fintechs, and consumer companies really integrating decentralized finance apps, use cases, crypto into their businesses?
Well, the main use cases that we're seeing right now of using Transact, one is DeFi. So the most easy to understand use case there is you invest your crypto into a DeFi application and you earn a higher rate of interest than you can elsewhere. The second main use case is games, so blockchain-based games. And the exciting thing about blockchain-based games is that the items that you have in the game are stored on the blockchain. So they're self-sovereign is what they call it, right? So in a normal computer game, if the game studio decides to shut down their servers, or if they decide to get rid of your items, then you lose your items. But in a blockchain game, those items and in-game currency really belong to you. So they start to actually have real-world value, which it's a very subtle point, but it has really huge implications. One implication of that is that you see play-to-earn games where people are actually making a living from playing the games, because when you get the items, they have like some real-world value. So that's really interesting thing. I would say that metaverse is a kind of extension of that. So that a lot of the games are starting to have more kind of metaverse aspects where you're having like some kind of in-game land or world, and the users can actually own part of that land. And it creates these really interesting types of applications where the users of the application kind of own the application and they govern it. And that's really interesting. And that kind of takes you on to DAOs and like self-governed kind of entities. Upcoming, some of the really exciting things that we're seeing in the market is that it's previously it was like Web3 blockchain native companies that are doing this stuff. Now we're actually starting to see big companies, sort of big traditional internet companies and financial institutions who are coming into the space. So we're seeing like big social networks, like for example Chingari and some others I think are going to be coming into that space soon. And we're also seeing big financial institutions like neobanking applications want to incorporate DeFi interest rates or staking, or remittance applications, as Shiva was saying, are starting to leverage blockchain payments for international cross-border payments. And one of the things that I think is really exciting about that is that if you can get money onto the blockchain, so if you can actually purchase cryptocurrency in your currency, given your current situation, then you can access any application. There's no barriers for people. So the same product that is very good for someone who is a billionaire can actually be just as useful for someone who's on the poorer side. And that thing wasn't true for the previous generation of apps, right? If you wanted to get the best financial management, you had to have a very, very high minimum bar. And so I think that's very, very exciting. And particularly for India, I think that's really, really exciting. And we should absolutely embrace it.
Added to what Sami said, we've also seen monetization of the creator economy. They've traditionally, at least in the Web2 world, had to figure out monetization through collaborations, to sponsorships, and the like. And most of the capital used to go to very, very only the people who broke and were elite in their field. We've seen 2021 was the year the creator economy entered Web3, and the NFT world just absolutely exploded because of this. And of course, companies such as ours were benefactors of upward adoption. And I'm really, really excited about not just the financial applications, which is of course yield, active trading as well, but also different personas coming in. Developers, of course, being actively involved in these ecosystems. People can actually earn cryptocurrencies. It's not just the only way to get exposure is not invest, as Sami rightly mentioned. You can play to earn, so you can exchange time in the form of engaging with a contract or a game, or contribute to its development, and in turn have an income native to that contract. So the creative economy, be it traditional creators or even engineers, developers, designers, product managers, they're all going to be significantly empowered if you're interacting with a self-governing organization. They don't care whether you're in location A versus location B. They don't care about what your formal education is, and they don't care about what your race or religion or your gender is. It's truly magical. That
I wanted to move the needle slightly into a different angle as we look at this. Right, we've looked at how DeFi could help us deal with issues like control of a few countries or financial infrastructure. But look at another aspect. Really, India is, as often people say it, India is one nation, but actually multiple nations within the same country in a way, especially from an income perspective, right? There is the India one, which is perhaps the first 100 million Indians. And that's where most of India's today's app economy, the startup ecosystem and all is really focused on. But then there is really Bharat, which is the next 400, 500 millions Indians. And that's something that the government is also trying to reach with these new accounts, etc. So, Shiva, I wanted to ask you, can DeFi really help us, perhaps bridge this gap and take us from a financial fintech perspective beyond the India one to really the Bharat and help benefit Bharat, bring about transformation there, and also make it profitable for many of these companies?
I think there are two things to look at here, and we probably have to take a step back and look at talk more broadly about tokenization that's happening with financial assets. And mind you, this is not just happening with cryptos, even with an ETF, an exchange traded fund, which is not seen as a typical fintech asset. That's again tokenization, and you have you can literally trade ETFs on an app on your phone. In other words, technology is helping you access investments which you could not do so earlier. And to me, this is also part of fintech. It's not just cryptos which are in the spotlight, cryptos and NFTs which are in the spotlight. So broadly, the point I'm making here is that I think tokenization does help democratize access to investments. So, and that is an important point to note, because when you're talking about the next 400, 500 million people, these are probably people that are from an economic strata where the bites that they can take are probably going to be smaller than the ones that have moved than the first 100 million. So one thing that I'm very genuinely excited about is tokenization in general of financial assets, including ETFs, spanning across ETFs all the way to NFTs and even cryptos. You can have bite-sized investments. So that is one. The second is on a slightly different note. Even certain investment avenues which were not accessible to your average investor, such as venture capital investments, private equity investments, where the ticket sizes tended to be large. Now, you with DeFi, you could actually that space could actually open up to some parts of the first 100 million and also some parts of the next 500 million that you're talking about. So yeah, I mean, to the extent that people have ready access to smartphones and apps are easy to download, and you have tokenization of financial assets, it does seem very promising.
I wanted to ask you really move into the regulatory aspect over here. And recently there have been some decisions, especially announced in the budget with regard to taxation on digital assets. Now, crypto companies see this as a positive because finally there is some amount of clarity, while some others see it as a negative. Do you think these government decisions on taxation really boost the sector and also the larger DeFi sector? And what are some of the other regulatory issues that need resolution for decentralized finance to really bloom in India?
Yeah, I think the right, yardstick for measuring whether it boosts or it diminishes anything is really the market itself, right? Like, so I think the industry reaction to this, and if you see the bulk of retail users, they are finding it quite challenging to deal with this, this law because in some cases it's almost impossible to comply with, and then when you do comply with it, it severely sort of impacts the economics of how people are have been invested in this industry, right? So I think the real sort of challenge here with tax is that the tax doesn't necessarily imply legality, right? So in India, any kind of income is a fair game to be taxed under the Income Tax Act. So even money laundering income can be taxed, right? And you could still go to jail, right? So it's not really, in that sense, the people who really start looking into the fine print, they are not very reassured by this. But I think the good news is that, like on the bill itself, there has been progress. So the real legality questions will be dealt with in the crypto bill, right? And I think that's what we were expecting would be tabled in February. But I think it's been going through many more modifications. So let's see, maybe by the monsoon session of Parliament, we should have a better sense for that. But I think the good thing is that there has been progress, at least, at last something is coming out of the policy apparatus. And I think that will be a net positive.
Sami, from a global perspective, as you look at India, as you look at the regulatory scenario, how do you really see the market, see the regulator, etc., and what's happening here? Well, what's your perspective on that?
I see that India is making progress, but there's still some room for more clarity and some progress to be made, I would say. When you compare with, for example, UK or Singapore, there's very clear regulations around if you want to sell cryptocurrency assets, it's very clear that you need to have this license and you need to comply with these money laundering regulations. It's very, very clear the set of rules that you kind of have to abide by, and that's very good for the economy and the companies in the space, because you can invest your capital and resources into building a product in that space, and you know that as long as you comply with the regulations, it's going to be fine. And so that's something I think that we should strive for in India, is to have total clarity. Right now the taxation bill kind of gave us some indication that, okay, this is not totally illegal, and it's something that we are open to working with as a country. But do I have 100% confidence in what is and is not okay in India? No, and that's okay, because this takes a lot of time to do, right? So I think that as a country in India, we should think about what are the things that we need to regulate, and what is the minimum bar that you need to do certain activities, and just be very pragmatic about it, right? So if you think about the concerns of a regulator, why do you do all these things? Like, what is the underlying reason? Well, it's because you want to stop money laundering, you want to stop fraud, you want to have consumer protection, and you want to avoid tax evasion and things like that. I think we just need to kind of build up a set of rules and regulations that allow us to do that, and then have some kind of registration process. Because right now there's some overlap between payments regulation and crypto regulation in India, and they're not really the same thing. They're very different thing. And I think that it will be really, really good for the economy if we do regulate it and get clarity as soon as possible. I don't think you can ignore blockchain. And if you do, it's like ignoring the internet 30 years ago. You just don't want to ignore it because it has such a profound effect on the economy. So I think we really need to focus and just get some very, very clear regulations as soon as possible. That's my opinion.
Yeah, I think that's a very important point you made, right? I mean, it's like the internet. If you ignored it 30 years back, I mean, they certainly would have missed a huge part of this. Now, another aspect of this really, the regulatory part, is that the banking regulator, India's banking regulator, the Reserve Bank of India, plans to come up with its own central bank digital currency. So, Tanvi, I wanted to ask you a little bit about this and how this will play in the DeFi space. And maybe, again, Shiva, Darshan, any thoughts you all have on this? We'd also really love to hear from you on this.
Yeah, I think that's a great question. I think this is something that last year we sort of started some deliberations on, because there is a very clear case for, DeFi sort of architecture being leveraged in even CBDC experiments. And I think now at an international level, some of this has started. But I think, this whole idea of like in DeFi, you have, finance is broken into primitives, right? And it's broken into certain specific classes of functions and smart contracts. I think this is an ethos that resonates in India, right? Because we have looked a little bit at the APIization of finance in a way, right? Like we did with UPI, and now we're trying with open lending, with the Open framework and stuff like that. So, and there are startups here who also very much have been looking for a while into how you can create API-based finance for all basic functions, right? Whether it's lending or insurance or any of these. So I think that's very similar in philosophy to DeFi. So I do think just the very concept of it and the fact that, DeFi has sort of proven its resilience, even when the markets in crypto were really getting affected, it was really the DEXs and, the DeFi apps that were very, very robust. And I think it's definitely, one of those very proven use cases of crypto, right? Like all the people who've asked what the real value of crypto is and what can it actually be used for. I think, the whole DeFi space has sort of proven its value, right? It is something that's here to stay. So I think there's definitely a lot there for, policymakers to look at. And, that is something that's slowly starting. It's not the easiest topic for them to engage on. But I think that, there is some appreciation of this. And I think, we've done some sessions even over the Reserve Bank, even around metaverse plays and things like that. So I think now there is slowly some growing awareness on that.
Shiva, Darshan, any thoughts on this?
Yeah, if I had to summarize my thoughts, it just comes down to a couple of points. Whilst we still await the shape and form that central bank currency in India, central bank cryptocurrency in India might take, is there a place for a crypto asset that's tied to the fiat currency in some form or the other? Absolutely, I think there is a place for that, because there is it creates an asset that does not have the same kind of volatility that your traditional crypto assets have. One use case that readily comes to mind is if you wanted to collateralize something within the crypto space, smart contract, or you wanted to collateralize anything, then a currency that's a crypto that is issued by the central bank and is in some form or the other tied to the fiat currency I think that would be a valuable use case that I can think of. That's the only use case that comes to my mind, but I'm sure there are probably half a dozen significant use cases that people can think of if they spend time researching it. So I think it certainly, to my mind, it certainly has a place and specific use cases.
CBDCs are an interesting topic for sure, but it makes the traditional financial world more efficient in the sense that if implemented right, it can eliminate dependencies and increase transparency in the traditional banking world. But everything in the financial world is all about trade-offs. The trade-offs of a CBDC is power and control. If you look at what the crypto space stands for, it's empower the individual or the true owner and power, as we all know, is zero sum. So if somebody is being empowered, somebody is not. Somebody's influence is reducing. Historically, self-custody was always the way of capital through holding on to precious metals and the like. With digitalization, we've transitioned that to custodians, and post Bretton Woods, it transitioned to trust. I mean, the debate is out there on whether that works. I don't think it does. I think in the last 25 years, about 50 countries have entered currency inflation rates of over 15% in 1 year. So I don't know if you want to say that the system works, but over a reasonable time frame, it's clearly proven that it's more an experiment than a robust system. Coming back to the original point, which is dynamics of power and control, a CBDC biases that more to the central regulator, and that definitely has its pros because you're eliminating significant control on the intermediaries, which is banks. And we let's say we're aware of the shortcomings. If let's say a bank is poorly run, you can only know whether there was a fraud or whether there was default or whether the health of a loan book has deteriorated post external audits, and it becomes the scandal of the month, essentially. All of that can be audited in real time, so there's tremendous value for the traditional financial world, but that bias of power is again coming at the cost of intermediaries, sure, but also individuals, because censorship becomes a de facto instrument, a de facto feature of CBDCs. So if a government is not pro LGBTQ rights, we know many such governments, they could significantly restrict money movement for those wallets, and those wallets are tied to people. And most of the time, the incentive of central regulators are aligned with the people. But when it's not, there are very ugly negative consequences of that. And I think wealth of people is best stored with them. At least the optionality of that is very empowering, and CBDCs move in the opposite direction.
That's a very interesting perspective. Darshan, I also wanted to ask you in terms of, as we come to the close of this very interesting discussion we've been having, I want to quickly look at, as we looked at the entire DeFi ecosystem, also, what are some of the funding trends, etc., that, and as an entrepreneur yourself, right, for other entrepreneurs getting into DeFi, crypto, what are some of the funding trends that you're seeing? What are some of the opportunities, and what are some of the gaps that still need to be plugged? And maybe, Sami, you can add to this from a global perspective as you look into India too.
So the space is absolutely on fire. I don't want to dial this down. And of course, every participant creating value has been a benefactor of the same. It's very important to note why that's the case. As Tanvi earlier mentioned, India post the removal of the banking ban saw customer growth from about 3 million customers ballpark to, I think, anywhere between 25 to 30 million customers right now. So we saw 10x customer growth in a relatively short amount of time. Additionally, we saw individual accounts because of the native banking capability, as well as innovation making education better, ease of use slightly better. there's a long way to go there, and Sami does a fantastic job on that, but still a long way to go. That drove a 10x volume growth per individual participant, which meant total activity was grown by about 100x in a very, very short time. So we venture capitalists, traditional investors, it's very lucrative to be a participant in that upward trajectory, and hence capital has been more accessible versus crypto winter. I have many nightmares with that phase or that timeline, but I think we're seeing just tremendous momentum around funding. I think just in this quarter, we saw two notable rounds. Polygon did a $450 million round. FanCraze just, I think yesterday, announced a $100 million Series A. I don't know what Series A used to be, but I know this is like exceptional. It's an absolutely exceptional round, and good job on Anshum. I know them very well, and they're going to do some very good work. But I'm very optimistic. I'm seeing pre-product innovators come in and raise enough to build an MVP, and of course, expenses have also gone up because of more access to capital. But I wouldn't go as far as to say it's easier, because the talent market has definitely become much more competitive. But the worry about running out of capital has significantly reduced.
So I see that there are three main areas of activity. One is building the actual blockchains, right? So the layer 1, the layer 2 technology. That's obviously companies like Polygon who are kind of building those scaling solutions, and that's the actual thing that all this code runs on, right? That's where the blockchain is happening. And the next area is developer tooling. So how can you help developers to actually build applications that get this to end users, right? So Transact is an example of developer tooling. We help apps to onboard users from fiat to crypto, but there are a lot of other a lot of other tools in the space, right? So maybe helping people to get on with wallets, or helping developers to do meta transactions, or other types of developer tools, right? And then the third area is you actually need to take all of this stuff, and then you need to wrap it up in an application and present it to the user, right? If you don't do that, there's no point in doing all the other things. So DeFi applications, actual game studios, like kind of wrapping all this stuff together. And I think that all of those things continue to be really, really important. But I think that we're now in a situation where building mainstream applications is really possible. And I haven't really felt that that's been the case up until this year. I think that we're now coming to a convergence where all of the tools are there to actually make a finance application that uses blockchain that's actually useful and usable, or a game that's actually useful and usable. And I think that's going to be a really, really big boom this year that's going to drive the whole of the industry, is that we're going to see a lot of applications that are really useful on a mainstream level, right? It's not, people are not going to call them blockchain applications anymore. They're just going to call them apps, right? This is the same way you don't call you don't call Facebook an artificial intelligence app because it uses AI. It's just an app, right? So I think that blockchain is going to become a developer tool that just permeates all applications, and it's not going to happen gradually. It's going to happen all at once, because we're getting to that breaking point now. So I'm really, really excited about the next 2 years and some of the use cases that are going to come out.
So, one of the things I really wanted to end with is really looking at the overall, the job scenario. And Darshan, you spoke about this when you said that talent availability is often very tight. So what are the areas where, talent availability is tight? And what are some of the jobs that will really be available in this sector? Because, while we see DeFi as also bridging the fintech gap for India and all, another aspect really in India is the need for jobs, right? as we seek to get out of the low and middle income trap. More and more higher paying, better paying jobs for especially for trained professionals. So, where are some of the talent gaps? What are some of the jobs that are available in this space?
So, any job that contributes to building an organization, the crypto space, the Web3 space is hiring. As long as you have a hard skill set and you contribute in any shape or form to move the organization forward, the crypto space enables. So think of what goes into a traditional business. You need accountants to ensure that your books are in compliance. You need corporate secretaries. You need people in HR. You probably need an operations team if you're customer facing. You probably need an inside sales team / account management team if you're business facing. And depending on your services, you either need manufacturing or in the internet world, you need developers, product managers, designers, quality assurance folks, data scientists and experts. In my perspective, it's definitely a space, because it's on the frontier of innovation, is attracting is looking for people who want to take that leap forward, who are positioning themselves as learners, who want to really pick up large amounts of information and a lot of uncertainty for that disproportionate growth in their career, and they're being financially compensated for that. So if India wants to position themselves as a place to really enable the Web3 world, it very much can. Although I think there's still a ways to go for that. Acknowledging that cryptocurrencies behave both as an asset and a currency would be probably the biggest step in that direction, because if it's regulated as an asset alone, settlement of transactions are taxed at the time of receiving it, which unfortunately makes Indian employees much less competitive than they actually are. Maybe I can get into an anecdotal example. I'm a developer. I'm 22. I like what this DAO or this company is working on. The company or DAO pays in its token, because that's the currency of the economy that they've built. When I receive payment in that token, today, thankfully, I can do that. And it's a taxable event when I receive it, because it's interpreted as an asset, and that transaction is being deemed as a gift. Despite me working day and night, breaking my blood, sweat, and tears to earn it, 30% is taken right off that. And then when I decide to sell, if there's a difference between the time I receive it and then the time I sell, I have another tax event. Let's say if I move that currency from token X, which is issued by that organization, to a stable coin, or even Bitcoin for that matter, because I'm bullish on that too, my profit and loss is isolated to that token, and my entire tax exposure is exposed to that new token that I get on, and I can't offset this. So what this essentially means is, because there's a 30% tax, I'm receiving 2/3, which makes me which and in turn, to compensate me for that, I need a 50% increase in compensation versus if, let's say, that person could employ me as an Indian organization. So there's a negative consequence to that for India being a destination of crypto innovation. And we're seeing the worst possible version of that being a brain drain. I'm sure you've heard that Bangalore and Dubai have become prime destinations for crypto. Dubai does not have crypto talent. Let me just spell it out for you in case anybody was wondering how the hell did Dubai become a crypto destination. It's just that they're not taxing at the time of receiving that capital. And if you can interpret it as both a currency, an alternate instrument of settlement, as well as an asset, India is going to be by far well positioned to create like tens of millions of jobs in this space, just like what the internet space did for Infosys, Wipro, and TCS, along with create the Flipkarts and the Creds and the Baijus of the world. I don't want to see those companies being built in Dubai or Singapore for that matter. I want to see that in India, just like how we were benefactors in India.
Well, I sure hope the government is listening. Shiva, I wanted to ask you finally, y'all at HeroWire, in the programs that y'all are developing, what are some of the skills that y'all are really building, not just on the finance and strategy side, but even in other technology, etc., that will really benefit this entire decentralized finance ecosystem so that Indian millennials can make the most of this opportunity?
I think that question is probably best answered by going over the building blocks of a fintech program that we're currently working on. So clearly, you need a base, a foundation on the unifying theories of traditional finance. You need to know what time value of money is, or no arbitrage pricing principles, and so on and so forth. That is essential. The second bit is focus on familiarizing yourself with existing significant use cases, because these are fast evolving. As we have discovered in this conversation, there are various new use cases that are coming up, but it's still critical to understand what the large significant use cases currently are, because that gives you a base with which to think about other possible use cases. The third bit is clearly getting your hands dirty with the technology itself, being able to code being able to code in whichever programming language that you need to be familiar with. And the fourth is being able to having the perspective to bring it all together in form of either a classroom project, or to build an app, or even an industry project to build an app, because you do need to go through that batting practice to bring it all together and put it together in the form of something that's tangible and useful. So that's how we are thinking of it. I won't pretend that there's any bit of stability in this. It's fast evolving, and as the course develops, there are newer and newer bits that we're having to think about, and that's just a reflection of how quickly things are evolving in this space. But yeah, that's how we are thinking of how the skills need to be brought together broadly to make someone employable and aspire for opportunities in this space.
Well, I sure hope that you all will be able to, in that sense, meet the needs that Darshan, Sami, etc. they have within the organization. Everyone, thank you so much. I think we've run out of time. We've had a really fascinating discussion. I learned so much about the possibilities of that DeFi offers to India, to really what are some of the great, fantastic use cases that are coming out. And there are so many coming out every day. Really how India can also take this from India 1 to Bharat, some of the regulatory issues. And I think Darshan was very powerful in those aspects. I hope the Indian government is going to listen and make this possible. We need to build some of these companies in India and not in Dubai. I think that's a very powerful statement. Well, on the whole, it was a fascinating discussion. I'd like to thank each one of you for being here, for your time, and for bringing these rich insights that you brought to this discussion on really opening up DeFi in India, surfing the DeFi wave, which is powered by HeroWire. Thank you so much.